audio update following the Fed meeting notes. Today, the Fed Reserve came out and said they're going to start tapering. And for some people, that means the equivalent of raising interest rates when technically, in theory, it's not. But it is a stepping stone towards official raising of interest rates probably late next year. At any rate, the stock market traded on both sides, up and down, on this news, currently looking firm. I think longer term, the stock market should like this news because it means the Federal Reserve thinks that we're out of the risk zone of, in terms of getting out of that virus recession last year, that we've probably got a stable footing here and not going to slip back into recession. So they can taper, they can start pulling back the aid here of supporting our economy. So we got to start thinking in terms we got to go alone on this, okay? But we should want that long term. In addition, I think by starting tapering, it can allow interest rates to start run up in the free market system. Then later next year, the Fed can come in, raise its rates as if it's trailing the free market. And in other words, they're letting the free market do the work of raising rates in line with a growing economy and perhaps balancing out or tempering inflation. And they'll raise their rate behind it so as not to be too far behind, but not to be the total driver of actually slowing down the economy or anything like that. You have to keep in mind the Federal Reserve needs to raise its rates before the next recession, which I don't think is till late this decade. They need to get a cushion there so when the recession comes, they can lower rates and then help out again. So basically all this news should really please stock market investors, businesses, practically everyone in the country. And yet, on a short-term basis, we cannot rule out moments of when some will sell stocks because the interest rates are running a little bit too fast, or they're just concerned that that will occur. So I'm not saying there won't be some issues here. We need to see how the market closes today, and then more importantly, even the week. But it's looking like our model forecast is correct, that we can still have a rally in the stock market this month, but we are looking for what we call level 2 top signal, even though we're also optimistic into early next year and believe we're still in a very long-term bull market for stocks. But there's always twists and turns, some of them larger than others, and we will be looking for the next twist and turn. But right at the moment, I like how the market handled this, seems to be on the correct thinking. I like how the interest rates have already perked up here, and I've been watching something for some people who are just small investors. They don't understand the bond market. They don't like talking bond prices. They just like to talk interest rates. There's a new micro futures out there and the 10-year note. I think it's on some of the other financial products as well. And I did notice that if it's starting to rally, the interest rate that is, and if it trades above 1.663% interest rate, then we're going to have some objectives of 1.76 to 1.82, which will mean the bull market from last year into this year of interest rates is probably intact. I kind of thought we'd get some sluggishness going into next year, then higher the following. Well, we're starting this whole taper business sooner than we've had in some recessions, and therefore we're probably going to start raising interest rates sooner as well. And the bond market is trying to stay ahead of that, and so it's already raising its rates, okay? And I think that's, again, a good constructive thing, but it could create some short-term problems at times where people view it differently. And it likely depends on how high the interest rate will rally. Now, something else to think, that now that it looks like interest rates can perk up, we can move forward. They're doing the taper sometime late next year. Probably they'll raise interest rates. You know, you can just see this can now counter a lot of this aggressive pro-inflation talk, and therefore it can also counter commodities. And we have had oil off $3 today, as it kind of was suspicious this might occur. That doesn't mean oil won't rebound now that this news is out of the way, even though interest rates are going higher. But I think over time, it backs my thinking that commodities are going down into sometime next year, inflation rate's going to back off from 5.4%. It'll back off next year. But I'm not saying inflation's coming all the way back to where it began from a few years ago. I doubt that. I think we'll stay at elevated levels, but they're not going to be high enough levels to really cause any kind of economic problems. And so I've been looking for reasons to try to explain why I think inflation's being tempered or will be tempered, if not knocked down at some point. And today's announcement here with this taper and the response of interest rates is one of those factors. It's helping my outlook here. So anyway, we'll still have to see. Chairman Powell will speak now. He usually speaks for like a half hour more after the announcement of what they came up with for their meeting. And so he can, maybe the market won't like some of the things he's saying. So let's see how the market closes today. But today's close and the weekly close, I think we got a good chance they're going to support what we're looking at, that there's still more upside in the stock market. And I think the rising of interest rates and this tapering and whatnot is likely only to cause some little short-term scares along the way here. But ultimately, I'll stay with the bullish scenario. I also noticed gold was off 23 today, and it should be. Okay, so they're going to be concerned that the interest rates will rally fast enough relative to gold that we actually got a negative number, more negative number than real interest rates, and gold bulls don't like that. They normally sell gold, or at least not going to buy as much. So we got some very interesting scenarios coming out of this news, and very pleased to how the model worked, because the model was saying the stock market ought to go higher in the next week for one type of trend, and then of course we have our scenario for November here, and it was kind of suggesting this report or this Fed meeting shouldn't be any more important to the downside than a few minutes, a few hours. And it was fascinating to see the stock market just hang right in there. They didn't want to sell the stock market as they went into the news of Fed Reserve. And yeah, then they let up and sold a little and bought a little and whatnot. But I think it's a sign of strength, and just fascinating. The model is saying, really, if you're looking for something bearish, this Fed meeting shouldn't matter, which means it should be a bullish result meeting. Well, at least for some of us, we think it was a bullish result in the sense that the Federal Reserve is saying, hey, our economy is doing okay, and it's going to be doing okay for quite some time, and it's time to get back to normal in terms of how we manage the economy, in terms of risk and the financing of our economy. Hopefully this makes some sense. If you're not a subscriber, get on board, because we'll explain this in greater detail on Friday for the weekly update. We also have a monthly update that I put out at the first of each month that is the long-term to super long-term of the stock market, something new, and we'll be cranking those out here in coming days here. But for the moment, until we see a violation of last week's low, it looks like we're on the right track for this modeling, and just fascinating that the modeling was saying we're probably just going to have a little hesitation off this Federal Reserve stuff, and it's going higher. And so here's giving some hope and a thumbs up here that we're actually going to get a decent close today, and more importantly, a decent close for the week. And as always, keep up with our alerts and our daily updates and these weekly updates on the stock market. Right at the moment, pleased with how the Fed meeting went. Pleased we're starting taper, and I think that's going to temper commodities and inflation a bit, because we're probably now going to raise interest rates, and they may want to raise interest rates into December anyways as a safety thing with the next round of dealing with our debt ceiling here in the U.S. Past results are not necessarily indicative of future results. If you're not a subscriber, get on board. Try it for a few weeks there, and my guess is you're going to be staying around for a long time. Thank you.